Chevron and the rest of the energy space sold off real hard this week when both Chevron and Exxon reported bad earnings. Although they hit their revenue targets, they missed on their profit targets, so both stocks got hit particularly hard. Additionally, Exxon and Chevron have both announced that they're going to be acquiring large companies, with Exxon acquiring Pioneer, and Chevron coming out in just the past couple of weeks announcing that it would be buying the Hess Corporation. Typically, mergers and acquisitions that aren't economically minded, in other words, it's not a company failing, are actually positive for a company. But with both Chevron and Exxon missing on earnings, it started to make investors think that maybe the demand for oil isn't as high as some people thought. For me, Chevron has an excellent management team with a great CEO and a good track record of innovation. Additionally, these giant conglomerates aren't sitting on their heels. They're not just going to rely on fossil fuels into the future, they're also developing renewables. So as a long-term play, I do like Chevron, but when it sold off this week, it got hit really hard, especially for a company of this size. The entire energy sector pulled back a lot. And this makes it so that it's a little bit intimidating because we don't know exactly how far they will pull back. It could be dramatic. That being said, I am a long-term investor and I only had a very small position. I made one buy back in May and I've been waiting months to be able to add to my position. I only use limit orders to protect against the possibility of volatility. But as you'll see in my buy from last week, the limit order actually worked against me because I got filled at the open of the day right before Chevron pulled back significantly. My buy went through on the 27th of October, adding 7.94% to my position at $150.51. And from that point, you can see that Chevron really sold off substantially, closing 4.23% lower than where it opened, which was about where I got filled. However, like I said, this is a long-term position for me, and I still have less than a 20% allocation. So this buy lowered my per share cost just 0.13%, down from $150.88 to $150.69. And that's fine. This is a starting position. I didn't even buy 25%, so I can buy a lot more at lower levels. My next buy target is at $140.17, slightly above a key level of support Chevron saw when it sold off in 2022. Again, this is going to be another relatively small buy, because it is possible Chevron could pull back significantly from here, and I want to make sure I have allocated capital ready to put to work at much lower levels. Since this is a long-term investment for me and I have a very small allocation, plus Chevron is paying over 4% annually in its dividend at these price levels, I don't have any interest in taking profits at this time. This is a hold for me.